Okay, very good morning to everyone. It's Thursday the 5th of October. I hope you had a good evening. Just getting straight into the briefing and looking at the charts this morning. Another fairly quiet Asian session. Don't forget mainland China still on shutdown given the Golden Week holiday. And overall on Wall Street session last night, another record close. This just becoming completely normal behavior for the US equity market, it seems, in this current environment. Minimal deviation. I did see a statistic. It's the variance of equity closes. It's been sub 0.5% for an extended period of time, and so on and so forth. So equity markets specifically in the US continue to see very narrow ranges at these all-time high levels. So the S&P was up about 0.1%. Similar margin for the Dow and the Nasdaq, so very marginal gains were seen across the board. As I said, that kind of fed through into the Asian session, one of the biggest participants out of the market, resulting in a fairly lackluster session. A little bit of underperformance in the Aussie. I believe that was down to some retail sales numbers locally that came out specific for Australia. But looking at the markets this morning, one of the standouts obviously on the charts here is sterling currency. So let's start with that as a talking point, because we've broken technically the range that we were trading earlier this week. So fresh weekly lows we broke. Just looking at the dates, this would have been Tuesday's low print here, and well, just as I'm speaking on cue, 132 test just happening now as I'm speaking. So you can see that break got initial 132.50 on that support point, and the intraday on the S1 push down all the way to S2. An extension likely stops at the level, comes back up to S2 for this next concerted push down. The obvious target here being on the run lower, 132, which you can see it just blipped down to on this last little test at the low. So quite a distinct underperformance here in the pound. And this obviously comes a day after Theresa May's pretty disastrous speech that she concluded the Conservative Party conference from being issued her P45 from a prankster to one of the symbols on the F word on the back of the sign behind her falling off mid-speech, to her actually not even being able to speak because of a cough and losing her voice. So looking at the press this morning, this is the summary of the headlines, and one of the ones that sticks out the most here is that distraught Theresa May could be gone by Christmas, as up to 30 MPs are now plotting to oust her after the disastrous conference speech. That was a source in the Times last night. This has already been denied by Number 10 that this is the case. But obviously you would imagine what happened yesterday, and giving the kind of reception, if you like, that Boris Johnson had with his speech, that it would not be surprising to see again her coming under pressure in terms of her leadership. So certainly hasn't really helped the situation of this in context of Brexit, which she spoke very little on, not really providing much new insight. And that fourth round of talks with Europe really ended with absolutely no progression at all, irrespective of her speech she delivered on the 22nd of September in Florence, where she was trying to bring Europe to the table. This first kind of number of 20 billion euros was put out there as to entice Europe into this transitional agreement. Really fell on deaf ears, and Europe have really voted it down. We saw that with the MEPs earlier this week. One shout out that I have to give, he's forced me to say this. He said he'll withheld my pay if I don't give this a mention. But I have to reshare this particular screen. You might recognize this chap here. This is, of course, is our head of trading, Piers, and he wants me to refer to a tweet that he specifically made the moment after Theresa May spoke. on the 22nd of September. Here was the chart at the time. If you remember, we were trading up at a 135.5 level. Let me just bring up the tweet that I'm referring to. This was the tweet that Piers made on that day. Immediately after her speech, he said, "The speech shows no progress on Brexit. Recent sterling strength is not sustainable. Now short cable, looking for a break of 133.10. And if you look where we're trading this morning, of course, he's a comfortable 250 pips or so on side. So hats off for calling the top of that move. And as you can see then, flicking back to the chart, and what we're looking at here, longer dated, there are certainly some interesting levels to have a look at. So this was the original peak that we had. This was around the time of the Florence speech here. And then looking at some levels of significance, this was the target that Piers was originally looking for. Given the fact that she didn't really say a great deal at that point was the fundamental reason. And then also the fact that as time continues to progress and the less action that is being made, the more pressure inherently is going to build up on getting a deal done, and that will increase uncertainty, and that will amplify then all these other negatives developing in our economy, such as a lack of confidence and so on and so forth. So now that we've broken this 132.87, which was the high that was seen kind of early August, it's kind of, well, if we continue lower, where to next is kind of the question. And so there's a fairly interesting level here. I'm looking at a daily continuation chart here at 131.50. So we've already had a brief test of the 32 handle this morning, but you can see here mid-September and also a resistance point from mid-July. So that would be an area of interest as well. And then going beyond here, you then start looking at the double top that was mid-May and then early July. And then you've got the 130 handle below there as kind of the obvious target for the figure. So there's a few downside levels that I'd definitely be mindful of if this trend, which has been in place now really since Theresa May delivered that speech, and we've fallen from approximately a 136 handle all the way down to this 132 test. So if we keep going, if we break the handle, 31.50, 130.59 and then 130 are all kind of key technical points of support that would need to be watched quite closely. In terms of a slightly longer term view on this Brexit situation, HSBC is one bank that's always been on the side that eventually, despite the inflationary pressures, the kind of political screws will start to turn and tighten as the Article 50 expiration comes due. And they put out a research note that I was reading this morning, and HSBC of the belief that the market is underpricing the risk of a no-deal Brexit, and they see the pound falling to 126. This is a slightly longer time frame perspective. But if you are falling to 126, well, what does 126 look like on the chart? Well, 126 does hold some significance, because if we were to look at the summer low that we printed, so of course this was the general election. Let me just pinpoint that particular area. This was the general election when we had the hung parliament situation, and then obviously the Tories had to team up with the DUP. But this was the low point that was seen the days thereafter, before that coalition was formed, and that really was around the 126 handle. So obviously that would be a distinct repricing of where we are at the moment. Now, one thing I wanted to show you was this, and then we'll talk and phase in a little bit about Spain as well, because that's been a key issue for this week. If you look at the pound and the depreciation that we've been seeing, what I've got here is the performance of some of the global indices. So this is looking specifically at the equity market. Now what you can see here is the top performers and then the worst performers. And actually I think this representation of the performance over the week is a pretty good snapshot of some of the fundamental drivers that have been in play for this week. Because if you think of the pound's been weakening considerably, look at the FTSE 100. The FTSE 100 is up here, one of the best performing indices over the last week. Obviously, as the pound is weakening, this has been that inverse relationship that we'd seen immediately after the EU referendum itself. So that's been coming back into play. Hang Seng has been the outperformer. China in the mainland has been closed, but there was some very positive PMI data at the weekend gone by, so that's lending some underlying support. But if you look all the way down the bottom of the list, who's been the distinct underperformer? Well, of course, that's been Spain, the Spanish IBEX index. Now, this price is actually of the end of play from yesterday, so this isn't real time, unlike some of these others here that are flashing at the moment. But if you look at the FTSE, for example, we're up about 2.25% over a week's period. However, the IBEX is down 3.5%. That's as of yesterday's close. So the Spanish assets do continue to feel a bit of the weight of this ongoing political situation that's happening domestically. Latest on this has been this headline: the Catalan leader lashing out at the Spanish king for taking the Madrid line. Overall, there was a speech from the Catalan president which was a little bit more conciliatory than I'd say the headline might suggest, but there is still a degree of uncertainty what this might lead to. I'm sure you've read other press articles, such like I have this morning, about how this could potentially start to then be a catalyst or a trigger point for other Eastern European nations that might see further fueling of this type of sentiment as a potential tail risk for European politics. Something to certainly be aware of. Spanish spreads has been in focus, widening over the benchmark Bund in combination with the underperformance in the likes of the Spanish equity index. How's this translating to the euro? Well, the euro's actually steadied out a little bit, if anything. Looking at the major pairs, euro dollars pretty flat overall. We're sitting around pivot. The dollar index is completely unchanged this morning, so really this is a clean case of sterling weakness on the back of, I guess, some uncertainty now about Theresa May and the leadership of the Conservative Party and the lack of Brexit progression overall. If you think about it, if Theresa May, the odds of her or the confidence in her diminishes, then this is only going to add then more uncertainty about the Tory leadership. If Boris Johnson is the second favourite, hypothetically, this might lead then to more of a push for a harder Brexit or a no deal, therefore equating to fundamentally sterling weakness, which is probably some of the reasons behind the technical break on the weekly level of 132.50. We're having some underperformance in the pound this morning. Okay, just having a look at one of the other charts, and I saw Jimmy in the chat room was talking about this morning, was the Bund seeing some underperformance. We're down about 18 ticks this morning in the Bund. Here we are having closed the gap on the move that we saw earlier on in the week. And so I just wanted to cover a few things that might explain some of the underperformance in the Bund future, down 20 ticks, irrespective of the fact that the DAX is also seen slightly negative. So if I flick to the calendar, there's a few things here that if you're trading these types of instruments, fixed income futures, and particularly bunds, you do always need to be aware of the European supply in the market. Now, what I'm highlighting here are government bond auctions. One is from the Tesoro, which is the Spanish debt agency or the Treasury, and then we're looking at the French equivalent. And then what you've got here is a very large amount in one specific morning of European issuance, new bond supply coming to the market. Now, just totting up some of these numbers this morning, and the reason why these are relevant is because these are kind of benchmark 10-year maturities, slightly longer dated bonds, which then start to weigh on their 10-year equivalents, such as the Bund. So you've got about 3.5 to 4.5 billion on offer in 2022 and 29 issuance. Coupled that with around 7 to 8.5 billion of a variety of different medium and longer dated French issuance coming to market as well. In combination then, you're talking about roughly 12-13 billion euros worth of additional supply coming to market, which adds then as a weighted factor for the Bund on typically as the market position itself for to pick up of these issues. So this is a consideration. The other thing as well that might be getting a bit of a look in is this. You have the ECB meeting minutes coming out at 12:30. As you guys are probably accustomed to, the minutes very rarely do they carry much interest, but the ECB minutes this particular occasion could be very interesting, because this is when Mario Draghi, if you remember in the press conference at the time, was hinting towards October would be the time of which they would start to unveil more details about the parameters and the process surrounding their tapering process. They're winding down from 60 billion euros of bonds purchased each month down to incrementally stepping it down going forward from January of 2018. So the minutes could well contain some detail towards the tightening process or the removal of quantitative easing, which would obviously be a more bullish scenario for yields. And so that as well could be another factor at play that might explain, but I'd say probably on a weighted basis it's more to do with the supply coming to market in fixed income from Spain and France that's weighing on the Bund, if you had question marks on that. Once the supply is removed, i.e. auction process is completed, then you might see a bit of an alleviation of the weight imparted by this process. So just be mindful of that in terms of your trade execution and timings. Okay, one other thing I just wanted to cover, because I was lecturing yesterday afternoon, but just as I got into the lecture theatre, I did hear some news that Rex Tillerson was going to hold a snap press conference. So the first thing I started to do was ask the participants in the lecture, what do you think is going to happen? Because earlier in the day, there had been some sources circulating that apparently back in the summer, Rex Tillerson had threatened to resign. And so then I started talking about, the facilitation of front-running the news. Would the move start to then occur? Gold started to get a little bit bid on the back of, well, if Rex Tillerson, who had been the more following the diplomatic route, specifically on the North Korean issue, kind of controlling Trump, being a bit more even-handed or measured compared to the more aggressive tone from the president, if Rex Tillerson was to go, what does this then mean for these types of situations? Probably, you would imagine, it would escalate to the point of creating a risk-off environment. Would the market start to jump to that conclusion already? So Rex Tillerson did indeed come out and give a snap conference where he basically said he's not quitting after report that apparently he called Trump a moron. So the top US diplomat said he's never considered quitting his job, and basically he said that he continues to back Donald Trump, the president. Okay, I've just seen a bit of breaking news come out about Theresa May. Downing Street has said resignation is not an issue for the Prime Minister. So that's just come out from number 10 Downing Street. So this is a rebuttal, of course, directly to that Times source report that I was just referring to at the beginning of this briefing. So Downing Street now issuing a formal statement to refute those claims. One thing though, I think I've said this before, that if you haven't learned from politics in the last 12 months in the UK and Europe, things can change rapidly. So the fact that Downing Street is saying that today, who knows what will happen tomorrow, but that's the current state at the moment. Okay, let's have a quick look at the calendar and then we'll wrap things up. So looking to the morning, things are relatively quiet. There's a couple of those key levels in sterling that I said probably you'll need to keep an eye on. Equity markets seem fairly muted at this point in time, as do the crude markets. WTI trading basically unchanged. couple of interesting comments out of a conference with Vladimir Putin yesterday, but very much just validating what we had already really heard the Russian energy minister say before, that they'd be willing to go further with the current non-OPEC production pact, which is due to expire in March, that they'd be happy to extend that if necessary at that point in time. But crude not really seeing much action, so really I think you're going to have to wait until North American participants step into the market to see the best of the day's price action. Looking at what's to come, you do have those ECB minutes, so I would be looking out for that. That's at 12:30. You've got US trade balance today, alongside the regular weekly jobless claims, and then later you get revisions to durable goods, but probably more importantly at 3 p.m. the factory orders report. The one thing I do want to draw your attention to, and this has been quite a pattern throughout this trading week thus far, is we have a very busy slate of central bank speakers, including the Fed, the ECB and the Bank of England. Now there's a couple here which particularly are of interest, one of which is Fed's Powell. Fed's Powell is speaking at 2:10 this afternoon, 10 past 2 this afternoon, and Powell is of particular interest because it's shot up as a potential candidate to replace Fed Chair Janet Yellen come the expiration of her term at the beginning of next year. So even though the topic is speaking at Treasury markets at an event, it would be, I'm sure, a question will be put to Jerome Powell at the end of the speech itself. And the question will most likely be, what is his thoughts about the circulation of this speculation about him taking that position. So that's going to be one to watch. Again, in summary, if Powell was to be the next Fed chair, that would be as equivalent as continuity on Fed's policy as being defined by Janet Yellen as you'll probably get. This would be the opposite case of if Kevin Walsh was to come in, who would be deemed more hawkish in that respect. The other people that I'm quite interested to hear from today are the Bank of England members, because you've got the outlying hawk in Ian McCafferty, but then you've got the chief economist Andy Haldane. And if you remember, when we were debating between the vote split, was it going to be 7-2 or was it going to be potentially the most hawkish split of 6-3 that we've had in the Bank of England in a decade, because you might have had Andy Haldane, who's been kind of flip-flopping between being dovish and hawkish. He was the one that people were tipping potentially could have turned more hawkish. And so I'd be interested to see what Haldane has to say. The one thing to keep in mind, of course, is the pound has dropped quite significantly, and if anything, the Brexit situation has become even more prevalent over the last few weeks from a more negative perspective. So I wouldn't be expecting anything too outright hawkish, but if he did, that would certainly capture some attention. Okay, so that's pretty much it. I'm going to leave it at that, let you guys get on with the session. So any questions you might have, please just let me know. I'll be interested to see what Piers' next call on the market is, which I'm told by the Amplify press office will be coming out later on this morning. So good luck with today. Any questions, again, as I said, just let me know in the chat room. Thank you very much.